Welcome to my channel. Okay, in today's video I'll be walking you through the weekly range, or let me just say it's a market breakdown day, and this is how I got this trade of the week. So this is the range I will be working with, which I have already marked it, and I have marked it. I think I marked it on Monday after a big push up, which you see here is the daily time frame chart, which is, you see, Monday, Tuesday, Wednesday, Thursday and Friday. These are our chart. So you see, on Monday we had this massive buy from here using this range. You see, you have to know that when you mark a range low, the range high should be your target, right? So the range high should be your target. So, and you have to always know that the low is almost always protected. So if the low is not protected, the range is mostly not going to hold. Or let me just say, the range is mostly not marked well. So this was it. Let me just drop to 15-minute time frame and let you see the view of what happened there. You see, so mostly the market, you see what the market did. It took this low, and after taking the low, it created a shifting structure here and provided a liquidity here, an inducement, right? So you see, when you pick your trade from here, you are not wrong. This is where you should be targeting the next high. So you are not wrong, but you see, the market at the end of the day will do what it does. So it came down and then took the low here. And yet I told you that if you have a range, the low or the high of the range is actually protected, is mostly protected. So you see, as it came down, so some might be thinking that this is a sweep of liquidity and then a structural shift here, and then they may be expecting to sell from here down to keep pushing down. But you see, yet the market has not completed the range. So the range, this was the range high which we marked earlier. So you see, the market later takes it out. So, and that's pretty simple if you get the drill. All right, so I'll be taking out this. So this was actually what happened that day. So when the market pushed up from, let me take out the drawings. When the market pushed up from here, so this was the low the market left before closing here. So let's go back to the 4-hour time frame. This is a market breakdown, remember. This is a 4-hour breakdown. Sorry, our marks up are gone, but it's okay. We already have it in mind. So this was our range which we are to use. Remember, this is the daily range, not the weekly. The weekly has its own markup, but for the sake of clarity and to keep the chart clean, we'll be using this. So there is it. Before the market reverse, what I was actually waiting for before actually before this candle happened, so you see the last candle here took this high and didn't close below it, so we are still bullish. This one too came out and didn't close above, didn't take out this high. So what I was actually waiting for was for the market to take out this low for me to have a buy setup. So I had a buy setup here. So you see, I have to drop down to 4-hour time frame to check much more. So you see, this was the low that the market produced before it takes out, and it's actually what it is. This, if you will know what the market is actually doing, you'll be very much more consistent, and it will even aid your precision in the market. It will aid your confidence in the market. It will aid your patience. You're not confident and patient not because you don't not because you are not because you don't have those habits or those characters. It is because you don't have enough knowledge to be confident, so that you will be consistent in the market. If you know that this is what the market will do, then you have no reason not to be patient, and you have no reason not to be consistent. So patience, consistent, and discipline comes when there is clarity. When there is clarity, it will be okay. It's just like a woman that is pregnant. You know fully that after 9 months she will give birth. So, and it's either boy or girl. So you don't actually panic, because you know that after 9 months she will give birth. So some people exceed, but you know that some people exceed and some people go lower than that, but you will be patient because you are clear about how the process is. So this is exactly the same thing with the chart. So when you have your knowledge in place, then at least you will be more patient with the market, right? So you see, the market failed to take away this high from here. This is a 4-hour candle. So it failed to go above it. Hadn't been the market went above it, I will have looked for sell down, but the market came and took away this low, and then so I'll be looking for a buy, which I looked for. All right, so this is it. So what are the things that complement a liquidity sweep to aid your confidence in the market the is the point of interest that you have above and below the liquidity sweeps of the market. So you see, on this, in this case, we have another block which is here, this bearish candle before the move. We have another block here. So you see, the market came down and tap into it and then push up. So you see how it is. So how the market was. So that's how it is. So we will also be seeing that the market had this range. So you have to know that the market is actually going to do what it has to do, even if you have the most accurate strategy ever. So, but you have to understand something, that patience is everything in the market, right? So On this, on the 4 hour, you see we have also a high that the market has taken, and when the market took the high, we go down to lower time frame. Remember, that is if you want to have if you want to have sniper entries, that's when you go down to lower time frame immediately after the market has taken a high or a low. Then you look for structure shifts then before pushing the button. So actually it's not necessary, but what we will be waiting for actually is after the market has taken this high. So you see, we were all waiting for the market to close below a candle, a 4-hour candle here, which we didn't have until here, right? So the market has taken this high and closed below this candle, right? So what we'll be waiting for, what we'll be looking for now, is a complete shift of structure, which is here, right? Which is there before we push the button, right? So I mostly use from the 4 hours, I go down directly to, you see, that is where the market has shifted its structure, a complete one, so that sometimes, you know, when you have this shift of structure and then you wait for this other block here, it's actually not bad because you are going with your confluence. So you see what the market has left without you, and that's not bad. It's okay. It's okay to miss a trade, and it's okay to do that. So we should also put it in mind that anywhere the market has taken a low or a high, the next place is likely to be another block. It's another block. So this is where you see the market has taken, right? So you see, and this other block has lined up with a breaker block has also lined up with this other block here, right? So the market has taken it and then keep going down. So this is how you keep getting your trade entries. What you should remember, you have a range to work with. So what you should be looking for throughout that range is a selling opportunity from that range to the target of the range. So this is what you should be looking for. If you are looking for anything other than sell in this market condition, and that should be a scalper, and that is going against the trend. So we don't be sorry in this industry. We pay with dollar and cents. All right, so this is it for now. I'll be doing much more breakdown on the market, and much videos will be coming to educate you. If you can see, market takes out this high before going. So that's how it is. It will take a high before it go, take a high before dropping, take a high before dropping. It takes a high before it drops. So something like this, and this is a POI. So I spot this trade today actually. So for the news, I spot this trade today, which actually I didn't participate in it. I didn't participate in the news. So but I had my trade here and I exit here because of the target. So that is actually nice. You see, the market took that high before going. So I didn't pick trade on Monday. So I had trade this day. I traded here down to this place, yeah, and I took this one here down to this low, but I use this fair value gap. So for safety, I put my low here actually. So I exited here, and for this I took my trade here, and my exit was here. So I didn't allow it actually to reach here. So my TP was actually here, this low. Okay, that was my TP, my take profit. So actually I knew that, yeah, that's based on the range we have. I knew that this is our target. So my TP was here. So you see, I had two trades, and then the fourth one here, which this one from here and down to the same place, to this place, right? So it hits the target and then come up to this place. I actually spot this place, but I thought the market would go up here, but as it didn't go, it shifted a structure here. Then I waited for the market to grab this liquidity, and then boom, I entered. It was a limit order. I entered and the market hit my TP here, and then before I know, news came, boom, took these highs and then came down. So this is it for today. So we'll be doing much more next based on your demands. Please subscribe, like, comment, and share this video, and drop a comment. I'll be following your comments, and I'll be doing videos based on your demands, and also my own demand as well. Thank you very much.